Hello everyone, this is today's video analysis for October 10, 2019. Today we're looking at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. Looking here on the daily time frame, we can see it's currently in an overall downtrend. Look at the black trend line. We have been in a downtrend for quite a long time, testing historic lows down into the 0.62 level at the green zone at the very bottom of the chart. Since then, since touching down into that low around 0.62, we've had a little bit of a rebound. The market's gone back up a bit, now challenging above the black trend line. We're down here inside this black box down here and have been for quite a while now. Let's go ahead and zoom it in on that. And as we do, we can see majority of price action going all the way back to, and I'll just look at this candle right here, September 19. So we're not quite, but nearly a month worth of time we've seen the market bouncing around between the pink, yellow, and green shade area. Today, of course, challenging the green zone. We're in a more of a tighter range, really. If you take that black box and think about a little bit of a tighter area, let's take a little blue box right here and go between the green and the yellow zone. The past 5 days have been held up inside of this blue box between the yellow and the green zone. Yellow zone 0.6297, 0.6285. The green zone 0.6320, 0.6330. And obviously, we've been held up in here for quite a while. Well, at least 5 days here for the New Zealand dollar. So the question is, what's going to happen today? What do we do with this today? Well, I think right now it's a difficult opportunity to buy and go long because the past 4 days has bounced right off of this green zone and turned right back around and went down. So we can't have any increased confidence yet that we should buy it. I think the only real reason to buy this would be that it touches back down to the yellow zone, which it's not there, or eventually breaks out, has a breakout above 0.6330. Until that happens, we're not going to buy until it breaks out above the green shaded area. Should we sell it into the green zone? That's a possibility. The past 4 days have proven fruitful in doing that, selling 63.20, 63.30 for the past 4 days has been profitable as it went back down to the yellow zone. So that becomes an opportunity. And really, both of these are opportunities, either the breakout above the green zone or the bounce off of the green zone to go back down. So we have to decide which direction we're going to play through because I think either way could end up being a possibility. I do want to make note of the fact that we're above the black trend line. That's important because if we're above there, that could be a clue and a signal that we're changing direction of trend and momentum. I also want to make note of the fact that we actually have a higher low. And so if you're looking for changes within the trend, you're looking for changes of the trend pattern. Zoom back out a little bit. The downtrend has lower highs and lower lows. An uptrend would have higher highs and higher lows. And so we do have a little bit of a higher low along that red trend line. And if that's going to be the case, we actually are going to be looking and expecting a breakout above 63.30 for it to go higher. Take it down to the 4-hour time frame and we get a little bit of a closer in view of what's been happening inside the blue box, the yellow zone, the green zone, and how the market's been bouncing around in there. So what are going to be the confidence boosters we need to take the trade? We can be more aggressive, more conservative with it, and we've talked about that in the trade room many times. But at least right now, we're watching the green zone. One of two things is what we're going to look for. We're going to look for the market to get above the green zone, which it hasn't done for quite a long, well, this entire viewpoint. We haven't seen the market above the green shade area 63.30. So that would be our first clue that maybe we're looking for a long opportunity if it can break above that green shaded area. The other thing we'll look for is the opposite side of that, that we get a sudden infusion of sellers, a big red candle, a bearish engulfing candle, a hammer candlestick, or inverted hammer, I guess I should say, something like that to give us a clue that it's going to turn right back around. The momentum is shifting to see this go and turn back higher again. That's what we're going to look for. I'm just trying to get this red trend line put on those lows like that. So that's what we're going to look for. Either it's going to break above or we're going to have some sudden infusion of sellers. You know, you look back here as an example. This was a good example of a sudden infusion of sell orders and it turned back around. We actually have an opposite example here at the bottom where the market had somewhat of a hammer candlestick and turned right back around and went back up. So if you look at the inverse of that up here that might give you a clue to go short. If you look at something like this, we might look for an opportunity to go short. Otherwise, we look for the breakout strategy above the green shaded area for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.